Hello friends, welcome back for Ethereum Technical Analysis. I'm Rocky Outcrop, we're all Rocky Outcrop ticians together on the channel. If this is your first video, welcome to the family. Check out the other videos we do daily. We've got Bitcoin, Ethereum, which is this one, Litecoin, Tezos and Chainlink are the ones I've been looking at recently. So yeah, cool. Let me know what you think about the videos as well in the comments down below and all that jazz. Whatever. Here we go. Let's take a look at the charts. We've been in this triangle formation here for the last, since the 12th of March, whenever the prices dropped down, really. And we've got these two areas within it that we're kind of looking to in terms of the upper side targets at 132 and 136 or 137 really. Whereby if we see the prices opening and closing above these areas on a longer term time frame, then we could be looking for a breakout towards the upside. And then if you had a big gold measure move off the back of that, then we could be looking towards this line here at the 382 and potentially, as well, this line here beforehand at this blue horizontal line where the 21 EMA will be coming in and around that area. Should you have a breakout at any given time over the next, even over the next few days or whatever to the upside. So like 155 and 163 would be the upside targets there. Having been more confident about getting into a move, should they actually have a decent time frame closing above this, coming up towards the 140s, and that for 140 itself, obviously being in amongst this area where we've seen wicks and everything go to in the meantime, and price action can move quite quickly up to here and back down again. We've witnessed that a few times. So that's looking at the upside, and we can see here, looking at this candle from the 20th of March, how things can really operate in this area, and this is quite a strong area for the prices, and that either side up and down from here with these huge wicks. I mean, this kind of tells the story for us is volatility territory. We've got the 236 below at 133, and this sort of overhead resistance at 136, and that's kind of where people are looking at really in terms of decision times. And then afterwards you've just got like profit taking and panic and everything else. Towards the downside, it's a similar sort of story really. Instead of it being a 236 or 382, sorry, Fibonacci retracement and 21 EMA and this horizontal line, instead you're looking towards this horizontal line here, and then around the 101 bucks. There should be the sort of the worst case downward side scenario. Worst case, I say, before potentially, if it were to step on down again, you'd be breaking various different psychological resistance points there, obviously with the $100, and you could very easily then look down to $84. But by the time you're doing those things, you're talking about huge moves that are very easy to calculate in terms of percentages. As soon as you break below 100, every dollar down is a percent. So we'll not get too carried away looking down the way should any of that happen, but we know where we're operating in between. And in yesterday's video, I think I made it quite clear really that you're taking on big risks really whenever you're operating to trade outside of these areas either way, and that, of course, I'm not a financial advisor, none of this financial advice, and yesterday's video wasn't financial advice either, as it happens, although the way that it rhymes with the financial advice was that saying that you'd be able to trade within this really quite easily, and there's a huge amount of opportunity and profit to be had here for either shorts or longs or whatever, just trading in the range at that time. So yesterday's one, you're looking at probably if you 12% profit easily for trade either direction, long or short, depending on whatever you're doing at any really point during the day. And look down at the 4-hour chart so you can see what I mean here. It's like there was if you were looking up here to be short in it or looking down here to be long in it, then you were standing in line to be making say you longed it just purely from there and then got out there. That's 14% just between the two areas there. So like there's no need to be looking for saying to yourself, like, I'm going to try and get into some sort of breakout play here, and I'm going to be getting in here towards the bottom, and I'm going to make profit on this move of of 36%, and it's going to be brilliant and you're in that or whatever when you're thinking about it, when there's 15% to be had here every other day maybe in the meantime. So I don't know like what the sort of psychology that you've got around this area is, but when you're talking about playing breakouts and all the rest of it, then it's good to sort of compartmentalize and say you've got the area that you'd be playing it within and then the area you'd be playing it without. And if you're looking to the outside, then you've got so much more risk associated with any potential trade. Somebody looking to play the breakout and get in here if it goes above and closes above 140, for instance, or 139 or something like that, is actually really easy to manage the risk. But you have to do it there at 136, you know, that's where you have to, because they're looking at coming back in here, and that's been the case over the last wee while. So it's made for really easy to manage risk longs, for instance, up there, and indeed really easy to manage risk shorts, where you're going up here and you're saying, look, if it closes on a 4-hour candle up here, I'll just ditch it at 140 or something like that. You know, for instance, and I'm not financial advisor, not financial advice, and then and you know that's not happened, and you'd been able to short it and just wait and get some sort of degree of profit out of your trade. And if you just decided yourself that you're really not going to be greedy and you shorted it earlier on when it was up above that area, and you decided to just get rid of it now during sort of during the time that we've been making this video, for instance, because this 4-hour candle's really only just started, then you'd be looking at having made over 5%. You know, like just from the line to where the price is right now is 4%, really, for 3.5%. So like there's no need to be greedy right now, which is great. Makes trading much easier. In terms of like long-term investment and all the rest of it, well, what can I say? So you got to look for the markets to sort of sort themselves out. But as you can see, this horizontal line here that's serrated and goes along to the left. If we look up to 24-hour chart, sorry, instead, you know, it's a good thing to be above this area. Being below this area is quite a dodgy thing, really, in terms of the price action overall in general. So suppose as we're looking down here to where the time, where you know where the prices have come to, the longer term outlook is rosy when you're above 121, and when you're below it, then you've got question marks to be had, and the question marks are, could I get a 10%, 15, 20% better entry on a long-term investment overall? And I mean, I can't really speak to that too much. Even if you just got down here at this blue line, you're looking at 16% better price entry than where you are right now. But I mean, it's difficult, because what you got to really do when you're talking to the long-term investment people is you got to sort of put on your really greedy hat and say, well, you're looking for something like, what you're looking for, 300% return or whatever. At what point would you be happy? Would you be happy at 268% return, or would you be happy if it was a 200% return, or would you be happy if it was, instead of being a 200% return, that you were just getting 133% return? You know, like, what are you really looking for? And that is quite a hard one to answer those questions. So that's why I kind of look towards the sort of more middling time frames or whatever. So anyway, thanks so much, and thanks to everybody who likes, comments, and subscribes or whatever. In the Bitcoin video, I had a wee laugh at the start of it, chatting about the comments people have left and stuff. And so I appreciate all feedback and comments, and everything else is great. And yeah, big hello to all my Rocket Corruption friends in the world. Thanks very much for tuning in, and I'll see you in the next video.